This is once in a lifetime. Most stockbrokers will tell you just stay with the market, they come back, and that's right 80% of the time. This is not that time. Do not listen to your financial advisor.
I know you were very bearish gold and the cryptocurrencies.
Yeah.
You know, you feel gold's going to 900. You said Bitcoin's going to 0. Okay.
My forecast, and this is just best forecast. It could be 10,000. My bet is it's going to go to simply the 2018 low after the last bubble crash. Okay, that was 3,250. So 3,000 to 4,000 is my target for Bitcoin. At best, it goes to 10. So we're not bottoming here at 20. Everybody think, well, now you buy. No, you buy it at 20. If it goes to 10, you lose another 50%. If it goes to 3,250, you lose 70, 80%. Okay. So you got to remember, the more it goes down, the less of a downturn it creates to have a big percentage loss. So it's still dangerous. It hasn't bottomed yet. It takes a couple years for a bubble like this to burst. And crypto is the future. I'm extremely bullish on crypto and digital currencies and money creation. It's a whole new money system emerging. It's in its infancy. It's having its baby bubble where it's get overvalued. It's got to crash. It's got to go from 40,000 coins down to some reasonable number, like whatever. You know, it has to shake out. The .com industry did this. Amazon was a small company when it bubbled up in the late 90s and then crashed. Tons of .coms went under, and the strong like Amazon came out and went from $6 to 3,500 in the next boom. So I am extremely, crypto is the next big thing, but it has seen its baby bubble and it does have to crash. And I put a number on that. Why did I get to 3,250? I'm marking the same amount of crash for Bitcoin as Amazon, the leading .com, did, 95%. It might be 90, okay? Maybe it's 6,000. But if I had to bet, I'd place my bet. I'd be buying Bitcoin if in the next year or two it hits 3,000 to 4,000. I'd be pumping it up because I see Bitcoin going to 500,000 to 1 million in the next boom. I'm saying gold goes from 2,000-ish down to 900 to 1,000, okay? That will be a lot better than stocks and crypto and other commodities. So gold I'm bearish on, but I'm less bearish on gold than most other financial assets. So if you have to have a little gold for diversification, it won't be the worst place to be. I say I don't want anything that's going to go down. I am projecting gold will bottom somewhere between 900 and 1,000.
So, sorry, just to get your timelines for gold and Bitcoin's bottom.
They will, okay, if anything, I think stocks don't bottom until at least the end of 2023 and maybe into early to mid 2024. If anything, Bitcoin, and particularly, Bitcoin and maybe gold will tend to bottom earlier than that. They are the bubbles, especially Bitcoin is the lead bubble. It will tend to crash faster and hit that bottom and tend to lead coming out of it. So I would say Bitcoin will see maybe 80% of its losses by the end of this year, or say early next year, January, February, and will, if anything, bottom several months before stocks.
Would you be buying treasuries here?
Absolutely. It is not gold. Gold was a safe haven. We were in an inflationary economy in the 70s. Gold is a hedge against inflation. That's what it's correlated the most with over its entire history. We're talking a deflation of an entire financial asset bubble like the 30s, and gold was fixed back then. So I can't say, see what happened to gold back then? Gold was fixed. So gold didn't go up, but it didn't go down much because they fixed the price. Gold should do what it did in 2008, just deeper. Gold went down 50% at the end there, or I think 45%, most of that in a couple of months. It was the last to fall, but it went right with everything else. I think gold's going to be down more like, 60% or more this time, but it's still less than other financial assets.
Okay. And you'd be buying treasuries?
Treasuries are the safe haven.
Okay.
And again, the longer term the treasury, the 30-year treasury is going to go up a lot more than the 10. TLT is the easiest to buy ETF, and that is a mix of those two, 20-year average. ZROZ, Z-R-O-Z, is leaning more towards the 30, so it's a 25-year average. The best thing to buy is 30-year Treasury bonds, but the easiest thing to buy is ZRAs, and that will go up more, about 50% more than TLT. So the long-term treasuries are the only safe haven. AAA corporates are next, but why buy a AAA corporate when a treasury bond is even safer? If the U.S. government can print money to keep a bubble going, they can print money to pay off their bonds, and they will. They will not default on that treasury bond. I don't care what happens.
Let's talk U.S. dollar.
Weimar Germany. We're not in that.
I want to get your U.S. dollar thoughts. Is it just, what's the expression? The most beautiful.
Yeah, best house in a bad neighborhood.
What? So thoughts on the U.S. dollar? What's your take here? Where do we go?
Okay, number one, this is a global debt bubble. Japan has printed more money and has higher debt ratios than we do. Europe has printed more money than we have and have similar debt ratios and higher of anything. We are, in the greatest debt bubble in history, still the largest economy, still have better demographics than our European and Japan competitors, even though they're starting to wane too. Our demographics are much more buoyant than Europe and way more buoyant. Japan just is they're not going to be a country at the end of this century. They're not going to exist. That's how fast people are dying off there, and they're having no babies and no immigration, okay? So we're the best house in a bad neighborhood, and the money's got to go somewhere, so it goes into the safest investments, U.S. Treasury bonds, other government bonds, or AAA corporates, but the U.S. Treasury bond was the best beneficiary in 2008. Here's the best way I can tell you, Danielle, to picture this crisis. It's going to last longer and go deeper. Take 2008-9 crisis, multiply it times 1.5. This is going to be 50% worse, 50% deeper, 50% longer. So stocks went down 57%, and I'm saying 86%. That's about 50% worse. That's the best way to keep. This is just 2008-9, but allowing to go all the way down, deflate this debt bubble, get rid of a lot of bad debts, which is extremely healthy for the economy long term. That's why you're going to come soaring out of this if you do that. That's the crisis. 50% worse than 2008-9. Instead of lasting 1.7 years, it's going to last maybe 2.5. Think of it that way.
Just to taking the conversation just in a different direction, we can wrap here. Do you think we're headed towards a digital dollar?
No, I think we're headed for a digital global currency system where Bitcoin is most likely to become the standard once it is universally accepted, much more value, $500,000, $1 million coin. There's a price, about $500,000 a coin, where Bitcoin becomes worth more than all the gold in the world and can continue to grow with the global economy, where gold is growing at 1% a year, global economy is growing at 5%. Gold cannot be the standard, so it'll be a digital system. Maybe the dollar is a big piece of it, or maybe there's one, but Bitcoin will be the backing eventually, not the U.S. dollar, probably. That's
You're talking about the future reserve currency of the world?
Yes, because here's the thing. U.S. has been the dominant country. We still have better demographics and grow a little more than Europe, but we go sideways. All the growth from here on out is going to be in the emerging world, number one, and more than that in Asia. It's all going to go west. So there's no way the U.S. dollar can continue to be the reserve currency for a global economy that's going to outstrip the U.S. and make it a smaller and smaller point. It's natural that the U.S. dollar in some way will not be the reserve currency. It may be part of a basket of currencies that becomes that with Bitcoin as a standard, or it might just revolve around digital currency. That gets more quick, but it is going to be more digital, and Bitcoin's more likely to be that standard 20 years from now than the U.S. dollar. This is once in a lifetime. Most stockbrokers will tell you just stay with the market, they come back, and that's right 80% of the time. This is not that time. Do not listen to your financial advisor.